First started at 88K, major de-risk event, price kept rising. Ultimately, 91,000 major de-risk event. Who believed it? Raise your hand if you believe that that was actually going to be a major de-risk event. I didn't. I didn't think that we would then go ahead and, I mean, a simple trend line. It's not the first time that's happened. And another 30, we'll call it 5% drawdown over there. It reminds me of a similar de-risk event that took place. It was over here live at the particular time with Great Morning, Brad, and he had the lined up over here. And we were like, oh, he pointed out if that line breaks, that's a major de-risk event. Simple trend line break will do wonders to manage risk around. And this is just one example over here. Price right now fighting to maintain the previous cycle ceiling as we have just chalked it up right now. Gold looking weak. I had just checking out this chart over here this morning, and the reason why was, well, first of all, I mean, it's hard to disagree with these cycles. He's calling it, this is CryptoCon, the 10 to 4 cycle theory on gold, roughly 10 and a half years of bull markets, followed by another 4 or 5 years of consolidation. This right over here brings my attention. I remember one of the first times I spoke with Ben, we did a collaboration. He told me offline that his worry for Bitcoin was that in the next cycle, right? The cycle that we just, what cycle are we in, Jordan? What's going on? That was 2021. So he was talking about the cycle. Here was the top over here. This is the last halving in 2024, and he's talking about this cycle. That, and he wasn't making a prediction. He was saying his worry would be that at this Bitcoin was not able to make a new all-time high. And if you look back over here and you're looking at this gold fractal, I think this is what he was envisioning, something like this. And yesterday I didn't get to talk about what my greatest concern was when we said this looks like textbook accumulation taking place on Bitcoin. And we said that, you know, lining up 4-year cycle theory and when that bottom would line up. And we looked at, you know, coming into this area over here, September, October, aligning with seasonalities, aligning with the midterm election price action, October on. And then we talked about, well, if that's happening and it looks like some Wyckoff accumulation, it looks very textbook. If something like that were to happen, and of course, we're not seeing the spring hit on this one over here, but that's just a rough sketch. And then, but my greatest concern, and the reason I bring it up is because of this over here, is what happens if we do see all of a sudden, like we're seeing all of these oil futures, this like naked selling, keeping the price suppressed down. What happens if it gets away? And what happens if we wake up tomorrow and the price is 140, $160 a barrel, and we see sincere demand destruction, first beginning globally and then also domestically in the US, and it causes a recession? Well, if that's happening, you know, that, I mean, guys, how do they even service the deficits if that's happening, right? Like right now, we have next week, we had the ECB today raising rates. Next week, we see the first Fed meeting with new chairman Wash, and what are they going to communicate? Everyone thinks, regardless of what they do, it's going to be a policy mistake. Look what they were handed off. The policy mistake came from Jerome Powell, letting it continue to run so hot, continuing to throw fire, to throw gasoline on the bonfire and letting inflation just get away. This is what world we live in today. So what happens if Bitcoin were to spend a prolonged, you know, we just saw a new all-time high, 125, whatever it was. And then what happens if we see like a recession occur, a global recession, and Bitcoin not able to do anything more than a prolonged consolidation? I'll tell you what that would mean. That would be the ultimate opportunity of your lifetime. And I know you don't want to hear that, because I know that obviously you would like to see Bitcoin take out the, you know, trading at 135, 150, working way towards it. So do I. But here's the thing. If something like that is happening, if Bitcoin is under pressure, if like all of a sudden narrative follows price, Bitcoin is dead, everyone's going to be missing the opportunity to take calculated DCAs into an asset that nothing's changed. Still permissionless, still censorship resistant, still an open free network. Bitcoin. So is gold entered into a 4 and a 5 year bear market from where we are right now? And would that bear market look different than others? Obviously, just drawing a box here. But are we going to see some type of consolidation? That would be suggesting, from my vantage point, that, and again, it's hard to argue with these cycles over here. And looking at this chart, you know what I see? I see a huge mistake. And the huge mistake I see is like calling the super cycle right over here in 2023. And all as it did, I mean, it wasn't, guys, it wasn't a mistake. It was a phenomenal call and well ahead of most. That's the truth of it. But this was just getting the euphoric parabolic push, right? And CTM, we know after our time together at late 2019, 2020, listen, like that's great getting people into the bull market, you know, $7, $8, $9,000 Bitcoin ahead of a massive 6, 7, 8x move up. However, what we're trying to do is call the bottom. And I told you that for the next Bitcoin bear market, what I'm going to try to do is get everyone in at the earliest opportunity. $17,250. No doubt that was the perfect call and on time. And the difference between riding it up. However, it would have been magnificent, and it wasn't, if the thing is, if I would have been like, okay, exit everything. But that's not what I know. That's not what I did, nor believed, or could have done in real time. So got the for sure the 17,250 bottom call. Yes, Jordan. Most analysts, you know, it was like you know, 25, 35, $35,000 calling out, oh, finally we've entered in a bull market. That's already 100% return from where it was. That would have been the way to play it perfectly from a discretionary standpoint. I wasn't able to do that. I didn't think that we would be trading below 60K. Or let me just get exactly. I didn't think we'd be trading below, came into the line over here. This is February already. 60K. Well, we haven't traded below 60K, but I didn't think we would be trading below this orange line over here. So where we are today, I would say, well, I don't think we'd be trading below 70K. And here we are, well below it. So listen, you got to learn, you got to grow, and you got to get better. That's all I could say. So sorry about going off on that tangent. Look, the heart of today's call, and today's call is super important because we just witnessed a mega wave come through, a mega wave on tech. And it started in April when everyone is max bearish. I think today a lot of people are bearish. And if I look at the charts, I say, well, obviously that was either a massive shakeout that just did its job, or this was like the first signs of shock waves about to hit. And we are in the midst of what is going to be what could be a pretty big correction. Now, the thing is coming out of April, very few expected the PA that ensued over the next 60 days. And we were able to see V2 nice capture. We now have V5 for the next round. I am making sure that all of my alerts and automation are set up today, the rest of the day today, and also for CTM in the Discord, getting the V5 stock alerts up over there. And then going ahead tomorrow. Tomorrow, we're not going to be on our regularly scheduled call. We might, because tomorrow is the launch of SpaceX. And tomorrow could be, or overnight, we could see a major escalation in this current situation that we're seeing with Iran and the USA. Or we could see a major fold. I don't know, high stakes game for sure being played right now. But like what I'm going to do is get the alerts in. And then I guess this dashboard's been working. I don't like it personally, but it's functioning. So I'm gonna get it functioning up for stocks as well. Thank you, Hat Tip Roman, for making sure that everything's in place. And then I'll go ahead and work on just making it look Dogga Nation be a little bit more purdy. But I want to make sure here that right now on the move to view. By the way, has anyone had trouble setting up an alert for strategy? I was getting a friend set up last night, and he like it set alerts for everything, and for strategy, it's like this strategy is not published. You can't set an alert. I'm like, well, you're looking at it on your computer right now. Obviously, it's published. Wasn't able to do it. I'm not sure what was going wrong there. If anyone has had an issue, let me know. But aside from strategy holding this current open short, everything else here has reset. We've released V5 on stocks, and we're ready for when that next wave comes in. And even though a big one just came in, volatility begets volatility. I hope the next one is even bigger. We're going to be there and prepared. Ethereum's still holding this open short, and Solana also holding an open short. Bitcoin and Cardano currently out of the market. Yeah, D-Power. Uh, that's a great question. And your premium is needed in order to, for two things. Premium's needed because this uses bar magnifier. So if you see like a red exclamation point that you don't have access and you do have access, you got to go into settings and you got to turn off the bar magnifier. You got to go to the properties. You got to click off using bar magnifier. And then the next thing you would have to do after that, well, is upgrade to premium. You want to be using premium. So next sale that comes along, because TradingView is always running some special sales, and like whatever level you're using, by paying for premium up front, it's the equivalent of what you're paying monthly. And then the importance thing here is, for example, if you turn off, here's the performance on TQQQ, right? So you have a 14.79% drawdown. This is running since 2019, 10,700% return. Turn off bar magnifier, right? And then you got to go back over here. This is, look at the difference in return and performance. But then you got to go down and you got to go to the setting over here where it says move stop loss on exit signal and turn that off. And then you could see, well, okay, now I have 8,600% return and a 16% drawdown. Jordan, that's not bad. No, it's not bad. And you could do that. You could set it up. That's just for TQQQ. That's going to vary if you do it for something else. And just for something else, I'm going to try Tesla and see if that does it. Or strategy would probably do it because it's both sides. So those two things you need to do. If you're not using premium, that means that you're not able to use the bar magnifier, which is then going to a lower time frame. And for these moving trailing stop loss is using the lower time frames to calculate it. So you're unable to do that. No, it's also here happening on the real time. If you do not have premium and you try to access these templates, you're going to get an error. It's going to say a red dot over here, red exclamation point. You then need to go into settings and turn off bar magnifier, and then you'll have access. And again, the performance is going to be different. So I would imagine that the performance is for what level TradingView you have. Again, the performance is still substantial, but it's worth having the most accurate lens possible. That's my own personal opinion. All right. Any other questions on that? D-Power? Anyone else? Go ahead and we'll take it up in the Discord. It's all very important stuff. We'll go ahead and turn it out and make sure that everyone's under the same understanding. So gold so my interpretation here of what's taking place is that we have a new Fed chairman. He wants to initially run off the balance sheet. That wouldn't be good for gold. And he wants to not only run off the balance sheet, but listen, during gold's massive run, the balance sheet was being run off, right? Why? Fiscal dominance. Is anything stopping this train? No way. The interest on the debt continues to grow exponentially. We're going to see some major numbers ahead. That's not stopping. So what else? Interest rates went over here. This is where gold peaked when all of a sudden we had this situation occur. Let's go ahead and take a look at the chart as we're talking about it of gold over here. And over here, we see the US invade Iran, and we start seeing, which is very unusual, right? So check this out. US invades Iran. US attacks Iran. Israel attacks Iran. And you have oil shoot up. You have geopolitical craziness with the Strait of Hormuz being, and oil dumps. So oil, which used to be a geopolitical event, horizon, safe haven, absolutely not playing that game today. What it is keying off of, though, is Fed policy. And it is a hedge against the debasement. And what you're seeing is, well, the Fed might move towards a policy, or the market's pricing in right now, where they're actually going to tighten policy and begin raising rates. Some believe they can't do it because of the interest on the debt. Others believe they have no choice. We're going to find out what Wash telegraphs next week. If we were to see some type of return to normal flows of energy throughout the world, which wouldn't be LNG, but if at least crude, at that point in time, and we were to see the price, collapse down below 70, I think that very quickly the posture is going to move towards they are actually working towards cuts. And I think that we're not going to see a bear market in gold that's going to last, let's say, 4 or 5 years, because what we'll be looking at is the beginning of what's going to be a lot further rates to come as they begin to do their best to run it hot, and they'll talk about why they're recalculating how inflation's calculated, and inflation's coming off, and the cover is going to be AI is extraordinary deflationary, and we're just cutting, and they're going to go ahead and run this thing as hot as possible. And Trump's like, I don't care about inflation. Inflation doesn't bother me. Run it hot, baby. And if that's happening, I think that gold is going to be off, and we could be in that zone of it being a low. Now, if that's not what happens and we move towards the Fed, for whatever reason, is going to be not only raising rates, not only one, but a series, 1970s redux. And then also Wash was like, I'm not kidding, I'm running off the balance sheet. At that point in time, gold is probably going to enter into a long period of consolidation. That's not my view. I don't think that's going to happen, but I think this is a pretty cool chart that, I mean, is this a failed cycle? I guess you call that a failed cycle. That's fine. Is it trying to fit something into what it's not? I don't know. All that matters for me is this. Yeah, this was a great call. The super cycle, March 2023, but this is where we want to be early, always. And this over here, by the way, this sweep, this is everything. This is gold. And you will find out soon enough as we get back to it. So what else we got going on here today? This is Bitcoin looking a lot like the double bottom of 2015. You saw a trend line break. You saw it come back down and a what? Sweep the bottom, liquidity sweep. And then Bitcoin was able to go ahead and begin its massive bull run of 2017. Similar situation. You see the trend line break. You see the liquidity grab in play. For this to happen, for that to happen, obviously, I think we would need to see I'm just talking about if we bottom here, like, because this is a long amount of time before Bitcoin made its all-time high from where the bottom triggered here, guys, because this is not straight up like this. From where Bitcoin puts in the double bottom, the liquidity grab, until it makes its all-time high, you're talking about another 12 months. So I don't think that's unrealistic if this were to happen at all. I think that would probably be right on time and well played. TXMC say, well, this bear market looks pretty much the same. I say, well, maybe, but it's also the bear market that has had, look at over here. This is the last bear market, right? And it's riding the top of every other bear. It looks different. And if this is indeed the bottom, if this bottoms out in October, then yeah, it was a lot the same. If it bottoms out in October and it continues to tug the top end of this deviation down, whether it's 75% or whatever, yep, it was completely the same. If it bottomed here, and if we're headed into a global recession and worse, it's not going to bottom, and I hope the 4-year cycle doesn't break to the downside, but it could. But so far, comparing these past bear markets, no, it looks like an outlier. It's the bear market that thus far has showed the most relative strength compared to all others. And yes, if this continues in bottoms in the same area and to the same degree, then we'll say it was much the same. But just like the bull market was different in many ways, we have to say that, well, this bear market is showing signs of being different. And that's just the way to look at it. God bless you. Thank you, Craig, for being here. So this is Bitcoin and its normal bear market length that a lot of people are looking at, but I want to show you from this perspective. So this is like 10 months to bottom, and then putting in the bottom coming up, and we're close to there right now. But look what's different over here is this all was making lower lows on the way down. Look over here, you've seen obviously the relative strength that we were pointing out that was occurring. What would have happened? What would have happened if they happened? You can't say what would have happened if they didn't lock down the globe in 2020. Well, I could say, well, if that didn't happen, then we wouldn't have seen Bitcoin crash in March 2020, and we wouldn't have seen Powell flood the system, and we wouldn't have. Yeah, but it happened, right? Because you could say, what would happen if the U.S. Israel hadn't attacked Iran and we weren't in this situation? Well, it happened. Here's where we are. This is for the bullish. Guys, Bitcoin always bottoms with that downward sloping channel like that, right? Someone doesn't like that. I love you. I love you, you angry person. This is how Bitcoin bottoms. And you can see that the divergence that Titan of crypto is showing right now with price making lower lows, and then the RSI over here is making so far a higher low, and you can see the past bottoms. And you know what? Yep, I think that you should very much be following all points of view and all perspectives, and then watch what price does and navigate around that. This is also quite interesting. I don't know what the floor is of power law because it seems to change an awful lot. So I'm not sure, honestly, what that is. But from this perspective, you could see that this is awesome, except for here. And again, this was an era. It happened though, Jordan. What happened? Well, FTX blew up. Well, yes, it did. And had it not blown up, I don't think that I thought that was the low up until CZ was like, nah, we're not buying them. We're not bailing them out. And then you saw what happened over here. But you see the slight pierce, which wound up being more FTX collapse. Could this be more? Could this be like something like, obviously I don't think strategy is going to collapse, but something that like bear markets bring out, and that is usually when the tide goes out, you find out who's wearing shorts. And could something unforeseen happen? Yeah, it could. Just like we could see oil shooting above, significantly spiking high and hard, and that would be something of an unforeseen factor. Speaking of powder dry, except for my strategy short, 100% on the sidelines after the nice take on the last wave on the upside. And then over here, we're looking 50-50. So lots of powder on the sidelines awaiting for the next direction, which could happen fast, either which way. We wait to see whether or not we're going to see a major escalation or we're going to see a fold. That what looks like in store. President kind of opening up the idea of taking the island, taking Crag Island, saying that, I don't know if that's bluffing. It seems that there's major cards being put on the table over here, including a nicely played Treasury Secretary Bessent saying that, listen, we're going to use Iran's frozen funds to reimburse Gulf allies. Like, I think that's a bluff that, like, listen, Iran, keep your missiles away from the Gulf infrastructure, because if you do, then the consequences is that money is going to go towards rebuilding it, and you won't have it. Or maybe it's true, but it seems like right now the US is trying to apply maximum pressure and hoping that the Iranians fold. And if they don't, this could get ugly. And that's where we are. What else? That's it. I'm going to get these alerts out into the Discord for V5 stocks. Tomorrow, we're not going to have a session. I got an appointment in the morning, which is why. And then if SpaceX IPO and or situation evolving radically one way, that around 2:00 p.m., 3:00, we might just jump on an impromptu live stream just to check out what's going on and talk about it. But I'm going to be spending that time building out the dashboard so that we have the CTM V2 V5 stocks inside there. And then here we go. All right, everyone. Beautiful day. God bless you. I'll see you all back here in the Discord on the inside.